are the Trump trades people have in mind the correct trades? Will it indeed be a bit of a repeat of the policies the last time? And we learned a fair amount of what he wants to do, and he generally says what he wants to do, tells us, and he at least tries to follow through. So I think the idea relating to renewing the tax cuts, for example, right, and the idea that there will be a fairly costly fiscal package related to that is certainly fairly likely if there is a sweep and he controls government. And yes, that could lead to higher break-evens. The dollar is quite interesting because, of course, Trump's policies that he endorses are dollar bullish, but his speech is dollar bearish. And in the end, I think one goes with the policies, not with the speech, which means we expect a stronger dollar if Trump has a bit of a comeback rather than a weaker dollar. But if you just look at the days where the days in the market that were clearly driven only by politics, not by macro, just by politics, which was after the first Biden debate, it was after the assassination attempt, and it was after Biden dropped out. If you just look at those 3 days, it tells you very clearly what the market thinks are the right Trump trades. And again, it's basically higher break-evens, steeper curve, stronger oil and bank equities. There was nothing going on in the dollar. The market did not trade the dollar in line with the elections because the dollar at this stage is really held back by various macro forces.
Dirk.
And therefore, that will still come later.
Dirk, fundamentally, though, don't you agree that the path of least resistance is for a weaker dollar? And if so, to what extent does that raise the risk of global competitive currency devaluation and a race to the bottom?
Yeah, our fundamental models are indeed bearish dollar. But we do think the election will come back, will be very important, and will lead to some dollar strength into the election. Now, that's of course assuming that Trump can actually come back and that it will be a very close race. Now, if post-election or if Trump does not come back, we are indeed in a much more weaker dollar environment. And that is basically driven, of course, by the U.S. slowdown and by the Fed. I mean, I'm not sure that that's necessarily a bad thing, right? I mean, many certainly emerging markets tend to trade a lot better when you get a weak dollar than when you have a strong dollar, and so the weak dollar would not be a problem for the globe, I don't think, and there would be something to be maybe even encouraged. But again, Citi's house view is that we expect a stronger dollar into the election.